Hey guys, hope you guys had a good trading week this week. Quite an interesting day on Friday, so I think it's important to talk about why this happened. So Friday we had a data drop. We had the unemployment rate. It came in at 3.5%, which was expected to be 3.7%. So that was a pretty big decrease. The reason that's a big deal is because this now gives the Feds more room to be more aggressive with their rate hikes. So before everybody was, on this Monday and Tuesday rally right here, people were basically saying, oh man, the Fed's going to pivot, they're going to they're going to pause rates, blah, 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 which, I mean, anybody with a brain knows that's not going to happen, and Jay Powell's been pretty clear that he's not going to do that, but markets still rallied on that news because that's what the news the media was pushing. So now pretty much what we're seeing is we're just kind of forming some consolidation. So I have this red channel highlighted just to kind of make it more clear here. But you can see pretty much 378.2 to 362.7 is really pretty much our level of consolidation. So we saw a similar thing happen back here in June where we just pretty much consolidated from 372.3 to 390.2. We're pretty much seeing the same exact thing. It's about an $18 range, and here's about an $18 range. It's closer to about $16, but same thing. So pretty much what I'm expecting this week is that we're going to stay in this range. I wouldn't be surprised to see us kind of push back up Monday and Tuesday, and then maybe Wednesday, Thursday start coming back down and end up around here come Wednesday before CPI and Thursday. So the big thing that we have forming here is this nice diamond pattern. You can see highlighted here with the red and then the black. So I'm going to be watching this pattern closely. These patterns are pretty explosive once they break. We saw it play out in Apple about 2 weeks ago, 2 or 3 weeks ago, where it led to the current big drop that Apple has. The only other big thing that talk about, I'm a little sick, sorry, is the phantom prints that happened this week. So I've highlighted them a couple times this year, and there's the first time I've ever really seen them before. Basically, where the days range. So if you look at Friday's range, this is still Friday up on my charts. It says our actual range was 373.3. However, our actual daily top for Friday was actually 369.37. So that's a $4 move that it says we made that we did not actually make. Now, why is that important? Because on Tuesday right here, the same thing happened. It had said we had hit 366.57. However, our actual low of day was 372.3. So you can see it put this huge wick on our candle. And from there, we pretty much came down. And finally, on Friday, 3 days later, we touched that level. So now the question is, because usually those phantom prints the day of or the next day, we see that level touched. With our phantom print being at 373.3, which is right about here, are we going to see a pushback to that level on Monday or Tuesday or Wednesday? Theory would be yes, we will. So the other big thing to note is if you have this black line right here, this is using the actual daily candle with the phantom print. You can see our resistance line to break back up is closer to 367.9. However, if we use the true, which is right here at 369.3 high of day on the candle and ignore the wick, our actual resistance line to break up is closer to 360.6. So that means SPY would have to open almost $3 down, which is about, about a 1% drop, roughly, and hold that in order to not break this resistance line. But obviously, I don't really expect that to happen. So we will break this red resistance line, which should open the upside. And also plays into my theory of hold 362.8 support, and then we're going to bounce back and test 378.8. Or sorry, 378.2 again. Diamond pattern support for Monday is right there at that 361.8. You can see where that played in on that Friday low from last week, and then resistance is going to be right here at 376.6. I wouldn't be surprised to see us hold this and break and hold this and just kind of chop in here before we get CPI on Thursday. Don't forget FOMOC minutes is also on Wednesday. I will be posting to the server a dedicated trade analysis for that and what we're doing and everything, so, or what I plan to do. And don't forget, I will be out of town on Thursday and Friday. So looking at SPY weekly, we're in a very aggressive black bear channel. We had 3 weeks in a row of selling, so it's kind of interesting. We actually had 1, 2, 3 weeks of selling, 1 green, 1, 2, 3 weeks of selling, 1 green. So are we going to have 3 more weeks of selling, or are we going to snap the trend and go up? We had a similar pattern right here. This was more aggressive, obviously. We had 1, 2, 3, 4, 5, 6, 7 weeks of red, 1 green, and then we had 1, 2, 3 weeks of red, and then we had a green, red, and then we finally took off. So if we haven't really had back-to-back green weeks since this top up here, and down in the lower range, it's hard to have a back-to-back green week, it looks like, too. So I'll be watching that closely. We do have a potential V-bottom forming here. However, the biggest thing I'm watching is we rejected the weekly AEMA breakout here, and we are maintaining the bear channel, and we closed our second candle in a row below the weekly 200 EMA. So key support Monday will be, or the next week I mean, will be 362. Key resistance will be 366.6. Whichever one of these breaks, really this red resistance, will be the bigger indication of where we're going. If we get a bad CPI reading on Thursday, which is kind of what I'm leaning towards, then we should see a test of right around 336 to 338 by end of week. This level actually goes back to COVID, as you can see right here, to the high of February 2020. However, if we happen to get a good CPI, then I expect we'll break out of this black bear channel and we'll close somewhere in the 380s. Below 390 probably, though. Looking at futures, it has the same diamond pattern. It's a little harder to see its pattern, though, but it's there. Same thing, we got this nice resistance line. Monday's resistance is 37.20, and key support will be right here at 36.50. So basically the close. Bulls will want to open over 36.50 and just hold that support, and we can see a recovery push up. Same thing, we're holding this 36.50 to 38.05 consolidation pattern here. And we could come down here and test 3600 again. And it could actually just be a 3600 to 3800 consolidation pattern. We'll have to see how that plays out on Monday and Tuesday, really. But this is the levels I'm watching right now. So looking at futures weekly, same thing, nice black bear channel. We actually have a bit of a more prominent red dotted with the black falling wedge, though, forming. So this candle is a little bit bigger than the weekly for SPY, but it is technically a gravestone doji. With a gravestone doji and a downtrend would lead to more downside. You can see how that plays out right here. However, being that it ended green, and we're kind of close to a double bottom here at 35.95. We could see a small move up next week, and this could lead to a bounce up. But in theory, based on technicals, it should lead to the downside. So key support is going to be right here at 35.90, followed by 35.30, and then all the way down here, if we have the bad week, is 3400. Key resistance will be 37.05, which gets us through that red resistance line, and then followed by right here at 38.50. Looking at Apple, so Apple was pretty, I called pretty well, I guess. I had called this triple top at 146.5 and the rejection of the 8 EMA, and that we were going to see some downside. I had some puts on Thursday that I had sold for literally break even, $0. Only because I wasn't trading yesterday and wasn't sure if I'd be able to manage the position. I wasn't sure exactly what I was going to be doing or what the schedule was going to be. But it played out perfectly. Those would have been, even for being 7 DTE, would have been 100%ers. So wish I would have held those, but you know, when you don't know if you're going to be able to trade and manage your position and knowing how this market is, there's no reason to take a risk, especially if you can get out at break even. Nothing lost, nothing won. Anyway, so this has a diamond pattern. It's a little bit more of an elongated diamond pattern, though, but you can see right here, basically our pivot point is this 142.5. we're kind of in the same red channel here that we were talking about in SPY and futures, where we're just holding 146.5 resistance, and then we're holding nice 138.2 support here. I will be looking Monday for a support bounce at 140 to hold this recovery channel to go up. And you can see even the diamond possibly could be forming a little bit bigger of a diamond too. We'll have to watch to see how that plays out. Key resistance is going to be this 142.5. Bulls are going to want to get back over that on Monday. Apple does have a gap though at 145.22 that we will look to fill early next week. The weekly, so same thing, we have that tiny little wick on the bottom, so it's not quite a hammer candle, which would provide a bounce, and I would say with a double bottom with a hammer, we would definitely see a bounce. However, having that technically be a gravestone doji, I do worry about the downside, especially with the weekly at 149.3 EMA being rejected. But key support is going to be this 138.2. As long as bulls can defend that support level, I really do think there is some upside, but the biggest thing they need to do is take back this 200 EMA at 141.7. We are in a falling wedge right here with the blue and the black, but we're also obviously in the blue channel and the black channel. Key supports go all the way down here to 132, and then possibly even to the low, the 52-week low at 129.2. If we get a bad CPI reading, I would definitely suspect a new 52-week low on Apple to be put in. If we get a good CPI, we're going to try to break through 145.5 and maybe even get up into the 150s. This 149.3 is a key level, as you can see how much trading below it has happened and then the trading above it has happened. Bulls need to kick this level back to have any upward momentum. Looking at Tesla, man, Tesla just keeps getting pummeled. It caught a really bad break on Monday and Tuesday because it had those delivery numbers over the weekend, which, yes, technically they missed, but it really wasn't a miss if you use your brain and think about what they were saying. They were saying, yes, they were 10K deliveries short, but they were already produced. They just hadn't been delivered yet. And then on Tuesday, we had the Twitter news, which then right here you can see it pretty much stopped the breakout, which I was thinking it was going to test 265, 260 again and gap fill, but obviously that didn't happen. So I called out this pattern back here on the 21st where we had this big inverse head and shoulders forming, and I thought we would see the 220s. Well, here it is. It played out perfectly. Now the question is, are we going to hold support here at 222, or are we going to come down and test the 52-week low at 207, or maybe even soft support at 213? Looking at the weekly, we finally broke through the June support line. This is the one that SPY and Apple had broken through, like a month or two ago. So you can see we have this pretty aggressive blue resistance line, which gives us resistance right here at 241 for the week. However, we are setting up to form a really nice double bottom here at 223. I'll be watching that closely, see if we can form that and try to get a bounce up. However, if we lose 223 this week, I really do think that Tesla's going to see a drop closer to 206. If Monday closes below this so this is my daily chart here. If we close below 223 on Monday, I will be looking, or even on Tuesday really, I'm going to be looking to go down here and maybe even touch somewhere in the 180s. I think Tesla's really due for a bounce. 6 out of its last 7 days are red. This was the green one right here, even though it was a red candle because of how it opened and closed. I think it's due for a bounce, and I would like to see it maybe even Monday. And I think Monday would be a great day to watch a bounce off 223, and maybe even by Tuesday test 245 resistance, and then see the next sell-off. But it'll be a tough week because we have a lot of market data coming out this week. So Monday and Tuesday is pretty much not a lot going on market data wise, which is good. So I think Monday and Tuesday will be our green days, but I'm looking for Wednesday and Thursday especially, and Friday, to turn in some pretty big red for us. So looking at Wednesday, we have FOMOC minutes at 2 p.m. We have PPI in the morning. And then the day after that is CPI. So that'll be the big one. And then Friday we have UMich sentiment. So I'm going to do a written market analysis, trade analysis on CPI and FOMOC minutes. I will post that in my server. But just a quick overview for CPI. If we're looking at CPI from a pretty objective standpoint, in my opinion, like don't even like just looking at numbers, like strictly the numbers. We have had two CPIs come down. We had 8.5 and then we had 8.3, so we were at 9.1 in July, and then August hit 8.5, September hit 8.3. Now for October, they are calling for a consensus of 8.1, which would be 0.2 below the previous. So that would be our third CPI with a decrease. However, if we look at the numbers, in general, we see about, from the consensus, a 0.2% plus or minus variance. So we really are expecting about an 8.3 to 7.9 CPI print. I don't think things have come down enough to see a 7.9% print. So my guess would be an 8.3% print, which would mean inflation has not peaked and we are seeing a pushback up in inflation. There is a note that we have had up to a 0.3% variance on the consensus, and forecast is actually 8.2 versus 8.1. So we really could see like an 8.4% print come and hit the books. So the biggest thing to think about is what is going to make the markets rally. So if inflation hits, regular CPI hits at 8.3, that's going to be bearish. Why? Because that says that inflation has not peaked. It is only leveled off, or it is going back up technically. Anything over 8.3 or higher, we're going to dump big. Now, if we get an 8.2% inflation, or 8.1% inflation, that's our third CPI in a row that's decreased. That's great, right? Maybe. So last time I got burnt because I knew CPI was going to come down, and I was correct. I thought it'd be a little lower than it was, but I knew it was going to come down. However, the thing that caught me that I didn't think about hard enough was core CPI. So core CPI has been steadily coming down. Last for August, July CPI core, I'm just going to say CPI, but I'm talking about core here, core was 5.9%. August came in at 5.9%, so it was even. And then we had September's core, 6.3%. That's a huge 0.4% increase that was unexpected. Now, same thing, let's look at the consensus. The consensus of core is usually 0.2% variance. So at best, with a consensus of 6.5% for this next October core CPI, we're looking at 6.3 to 6.7% on the core. So if core misses, because that is what really drives the rate hikes, we're going to see a big dump again. Even if CPI makes it, by some miracle under 8.3%, and core misses, it's going to be the same exact thing as last CPI. We're going to have a huge face dump. So for me, the chances of a good, double good numbers below expectations and below consensus happening this month is very low. So for me, I would be looking at puts. All right. Last thing I want to talk about real quick here is the VIX. The VIX is still in this nice upward channel. You can see we're pretty much failing to break through 33, but we're also failing to break under 28.3. We're just kind of stuck in this choppy level. We did get a nice revert to mean right here at this 31.6 level from the last at least 6 trading days. I do suspect most likely Monday and Tuesday they're going to try to unwind this VIX down into the 26s, 28s. They're not going to really want to go into CPI with the VIX already at 32 because, we have days like this back here. Let's see, it's June, where we have, a 7% day. Let's see, there's other CPI days back here too. We have had some massive CPI days where, VIX goes up 20% or something like that. So, here's the September 13th CPI. We had the VIX go up 14%. So, 14% if we're at 32, that's going to be a big deal. Let's see. But I put the VIX at 37. So they're not going to really want to see the VIX up in the 30s before CPI hits. So I'm expecting Monday and Tuesday to be pretty bullish. I don't think it's going to be, an amazing face ripper like last week, but I do think we start, pushing back up into the 370s and try to test this level. And I think we're just going to sort of chop pretty much until CPI hits. That's kind of where I'm at. So, all right, I hope you guys had a great week. I posted in my Discord, but I had a really nice week, made about 7,100. So you guys have a good week, and I will see you guys next week. Thanks for tuning into this video. Hope you guys enjoyed it. If you like what you saw, go ahead and hit the like and subscribe button to stay updated. I am providing my Discord link right here. That's the lifetime link. If it doesn't work, go ahead and send me a message and I will get you a new link. I do have a pre-market update I do every day where I update with supports and resistances and different scenarios that might play out through the day. I also do a live commentary throughout the day with updates and changes, and I do push out buy and sell alerts on SPY and other tickers that I'm trading at the time. Currently, membership is $20 per month or $228 per year. You can follow me on YouTube, Twitter, Instagram, or TikTok under SPY Optionaire or Reddit under Daddy Dirch.